Good afternoon. How are we all doing? My camera working? Yeah. So my computer just said, "Hi, need help with your camera?" Selected camera device is already in use. Weird. How are we all doing? Afternoon, everybody. There's only 15 people here. 20. Oh, it's updated. How are we all doing? Is the chat working? Hi, Joe. Yes, the chat is working. Right. So just going to stream a bit for non-farm payroll. Afternoon, Soul Trader. Just have a look at basically what happens this afternoon. Afternoon, Don. Just really interested to see what happens, basically, because I've never seen this before. Afternoon, Ryan. This market. So, SkyPoint, what's happening? Yeah, so just want to see what impact the unemployment numbers have on this. This is I've never seen this much red on the dash. I have once COVID, like I said this morning in the live room. COVID, we had this much. I don't think I've ever had a full dash, but anyway, we'll see what happens. So obviously non-farm payroll normally moves the market. Which way it's going to go this afternoon is very hard to predict. We've got 200% of the monthly range achieved for the Euro Odd and the Aussie Dollar Swiss. It's the 4th of the month. And we've already done 200% of what it normally takes an entire month to achieve by the market. So it shows you how big these moves are. We covered it this morning in detail, but these are the largest moves we've had, especially this Swiss franc. Aussie dollar Swiss. I mean, this move today is 300 pips. ADR is normally in the region of 45. We've had 50 because of the movement yesterday. So this is 600% of the normal daily range of movement. When you look at the daily chart, you can see how much this market is panicking. The Swiss franc is the safe haven. The safe haven gets all the money when the market is in extreme fear or greed mode. Extreme fear mode, not greed mode. Gets the other way. So there we go. 150 euro CAD. Come on, you can do it. Let's put it up. Obviously, stock markets completely collapsing. That gap's not going to get filled anytime soon. So really interested to see what happens with non-farm this afternoon, because this could just be the start of that. So I really don't know if unemployment has got anything to do with what's going to happen now moving markets, because unemployment, as I said this morning, is an indicator of future interest rate direction. Interest rate direction is currency direction. So if interest rates are going up, the currency is going to go up. That's how we trade. Normally, unemployment rates will drive the interest rates, but I don't think that's going to happen anymore, because we're now interested in trade wars, not unemployment. It's a given. Half of the population are going to be unemployed. Basically, that's what he's doing. He's destroying economy. Economy destroys business. Business, first layoff, human beings. Yeah, the highest cost for every business on the planet is the human being employed. When a business suffers, when stock markets collapse, stock prices go down, profits drop, costs go up, human beings get made unemployed. So this number, it doesn't matter what it comes out as today. Even if unemployment's gone down, this is last month, irrelevant. It's going to go down in the future. But how that's going to affect interest rates moving forward, very hard to forecast. So just want to see really what the market makes of this today, whether the market uses it as a dumping ground to just propel and throw more petrol on this fire, or it's going to use it to unwind positions, which will tell us how much of this is speculative movement, and make profit on it. Yeah, one of those two things is going to happen potentially this afternoon. So we will see which way we go. But at the minute, as you can see, we're obviously just sitting around waiting. So afternoon, Leshy. Afternoon, Dennis. Afternoon, Mumo. So yeah, big moves across the board today. obviously we watch the stock market open, but the vast majority of movement today has been on the Swiss franc, obviously the safe haven runs, and the Australian dollar and New Zealand dollar absolutely destroyed today. This is the biggest move on the Australian dollar I think I've ever seen. I can't think of a time in the past where we've moved this much in a day. Even COVID. I mean, this is COVID. We looked at this morning. You compare these candlesticks here, the size of those candlesticks, to which is COVID collapse, to what we are achieving now. Doesn't even touch the sides. Look, we've got 280 pips move there when COVID started. We did have one massive day here of 548, which was a complete whipsaw, which was obviously confusion in the market as to what's going to happen next. But look at today and look at those COVID moves. Just doesn't compare, does it? This is a destruction of world economics. So who knows? My FTSE and DAX took a loss today. How did mine do? Don't know. There was no trades today on the FTSE. Oh, yes, it was. Yeah. So DAX was a nice profit. So profit on the DAX, loss on the FTSE. You shouldn't have taken a loss on the DAX today. The DAX was a clean break. How could you have not made money on that? It just went and it didn't stop. You couldn't lose money on that. Longs didn't work. Shorts. I mean, you'd have to have a trailing stop of less than 12 points to get stopped out on that today. So nice profit on the DAX. So we will see where we go. So we have got less than a minute. So I think what we'll do, we'll watch. What should we watch? Let's watch the pound US and the euro US. Let's watch the euro US. And we'll watch the NASDAQ. Let's pick a 5-minute chart up. We can look at that. Oh, big spreads coming in. Here we go. 30 seconds to go. Nope. So it's gone. Right. So strong US dollar. Potentially. Nope. Weak US dollar. Whipsaw. I had 2 whipsaws on the DAX and a big run and win. Yeah. Yeah, same as me. I had two failed longs, I think, one failed short. Where are we? The 4th. So on the FTSE, on the DAX, that was a long. That was a short. Those 2 were shorts. So that was a partial. So yeah, a long failure, a short failure, and then a short break. So nothing. Well, that's a letdown, isn't it? So yeah, no movement on that at the moment. Give it a chance. It might go. There's no spread either. So there's a lot of volume coming in. You can see a lot of volume coming in. We're twitchy. So there is volume coming in, but yeah, nowhere near what we'd normally get off an NFP result. So I would imagine the result has come out as expected at 4.1. No, it's a 4.2 as well. So we've even got a deviation and the market's not interested. So there you go. It just shows unemployment rate, irrelevant. Doesn't make any difference now. It's nothing to do with this. There's no fundamental figure, I don't think, that can come out now that is going to really move this market. CPI is irrelevant now. Inflation doesn't matter because inflation is going up. Unemployment doesn't matter. Unemployment's going up. There's nothing you can do to stop that because basically all prices have just been hiked by tariffs. Therefore, if all prices go up, inflation's going up. There's nothing you can do about it. Profit is going to be down in companies because company costs have just been increased by between 20 to 75%. So as those go up, people will need to be laid off, which means unemployment goes up. So I'm not really surprised the market's not paying much attention to this because it's irrelevant, isn't it? What Trump's done, destroyed world economics, that's what it is. It is what it is. So China's fought back this morning. Obviously, China has retaliated with the tariffs. So we've got Europe retaliating next week. So, yeah, we'll see what happens. There's the China retaliation, 34%. So Trump put 34% tariffs on China. 2 days later, China puts 34% tariffs on the US, cancels itself out. Trump comes back, puts another 20% on China. 2 days later, China comes back, puts another 20% on. The only people losing are the US populace. That's it. They are the ones paying the price because it's the import duty. So everything in the US has gone up by another 34% today. Good luck buying an iPhone if you live in the US. You're stuffed. You can't get Samsung, you can't get iPhones, you can't buy Huawei's. I think you're going to have to go back to the, the old ones we used to have cables attached to the wall. Landlines, I think they were called. That's your next step. Afternoon, Chris. So that obviously this is all that's going to happen. Like we've all said, everybody on the planet has said, and he's just not listened to. Nobody wins in a trade war. Everybody loses. Stop it. Fucking idiot. Anyway, traders lift Fed easing bets further. See a 50% chance of a make-up. So there's a lot of, we talked about this in the live room this morning as well. There's a lot of this coming out, which is basically futures. I've always wondered what that is, that traders. It's never really crossed my mind to worry about it too much in the past, but now I'm interested in who these people are. And as somebody posted, it's basically just the futures market. So traders is any futures price action, basically. So obviously the futures market is moving a lot at the minute, and it's got nothing to do with fundamentals. So the markets, these are signals generated by the market basically saying this is what is going to happen with interest rates, and typically this is pretty accurate. So if the Fed says something, you will see a move in the futures market on interest rate futures, which is an indication of what's going to happen to interest rates in the future. That's why they call it the futures market. What right now, futures market is selling off like a lunatic because it's fear. It's nothing to do with what the Fed is going to do with interest rates. So when these alerts are coming up on here, these are triggered automatically when certain price points are moved within the futures market. That's nothing to do with what the Fed is going to do in the future. The Fed's going to have to put the interest rates up because inflation is going up. So don't pay any attention to anything you see on here about potential forward sort of prediction of interest rates. It's not going to make any difference. Canadian unemployment 6.7, so that came out on forecast. Again, that'll be going up probably. Traders pair bets on Fed rate cut by May after job report. June seen as a likely start. You see how quickly this market is changing, yeah? Yesterday we had no changes on interest rates, followed by 100%, a one basis point cut on interest rates, followed by 50%. And in the space of from 11:18 to 1:34, we've now changed from April to May. From May to June. Yeah. So this is how fast this thing's moving. Within hours, you've got a completely different outlook. You literally cannot trust anything in the market at the minute. Cross your fingers, flip a coin. If it's heads, go long. If it's tails, go short and hold it. It's the only way you're going to make money. There's nobody in this world is going to be able to forecast anything from now on. Traders continue to bet on 4 Fed rate cuts by the end of the year. Not going to happen. Bank of Canada, April rate cut chances rise to 62% from 50% before the jobs data. Again, this is all automated. This is all automated signals. It's now becoming very clear that this is fully automated because that is not the case. Yeah, they've just come out the same. Yeah, you're not going to suddenly change your stance because the data's the same, are you? I don't know. Very weird. Right, there you go. So it looks like a little bit of strength coming through in the euro, in the US dollar. Euro-US dollar's coming down, but we'll whiz through all the other pairs and have a look. So yeah, US dollar strength there, ever so slight. I say ever so slight. Normally we would be going, holy cow, look at that. It's almost half an ADR in 5 minutes. Half an ADR in 5 minutes is the norm. In fact, that's a tiny move, isn't it? We're used to seeing an ADR in 5 minutes at the minute. Crazy. Look at these hourly candlesticks from yesterday. Each of those hourly candlesticks is 3/4 of an ADR. So we're used to the market taking an entire day or half a day at least to move to the average daily range and then come back from it. Every hour we're doing almost the entire daily range. It's just unbelievable the size of these moves. There you go. So there's an ADR. Look, that one candlestick, that 1 hour on the US dollar yen was an ADR. Nuts. So yeah, we'll see. Australian dollar, obviously, it looks like it's starting to recover a little from today's move. So we got a lovely big tail going in there. Whether or not we are going to get any correction on this move today, we'll have to wait and see. But obviously the market is rejecting the lows at the moment. But whether that's because of exhaustion or it's just a pause in the next leg, we'll have to wait and see. So I'm not really, I mean, this any other day of the week, you show me that price action and I'll be long in that. Today, the speed and the size of this move, not really interested. I'm done for the day. I've already made my money today, so I'm not getting involved in any more. But euro, what about the euro? Euro CAD? Nice rejection to the upside, so good looking short potentially, but you know, from a technical perspective, all of this looks amazing, doesn't it? But I don't really want to get in front of anything. I'm not really interested in taking anything against this this current directional trend because you know it will work out or it won't. Like I said, I've done my money today. I've taken breakouts this morning. I'm flat. I'm up 10%. I'm done. I'm not going to get involved in any more. There's no point in over risking at the minute. I've got an inside bar just formed on that Euro CAD. Look. So we're contracting, ready for the next move. So take a break of that high or low, or a break of that high or low. Got a good chance of getting 5 ADR out of it. I don't know. Who knows? Today is just nuts. Let's see what the DAX is up to, see if the European markets have paid any attention to that. No. So we're just back to where we were before NFP. And we are pulling back on this DAX. So there's a big old propulsion gap here, which I expect to be a target to the upside normally. But that flag break is potentially what we're seeing on this DAX move. So this is today's move on the DAX so far. And that is your 38 retracement. But this propulsion gap here is 50%. So that's a really good short point for the DAX today. If it can push up into there, be interested in an exit or an entry rather in there today. If it can get there. And just assume that we are just going to pull back and continue. There's no reason for this market not to do that. So China's basically undone some of those moves from the US. So there's likely we might get a little bit of US strength coming off the back of that China announcement. But obviously we need to wait for Trump's response to that. So obviously we've now got the 34% gone back on. So what are you going to do next, Trump? Because now it's your move. You need to decide whether you're going to put more on China and then wait for them to put more on you until we get to sort of 2,500%. And basically it costs more to buy a phone than it costs more to manufacture a phone than buy it. You know, just pointless, isn't it? It just doesn't work. So we'll see what happens. This 11 US companies on the unreliable list as well. I'm not quite sure what an unreliable list is. I've not heard the terminology before, but I'm assuming China has a kind of recommended list of companies to do business with, I would expect. So they're just getting more kind of sanctions, if you like, placed on the US just to fight back, basically. So, but interesting moves today. Traders of short-term interest rate futures bet on 50 basis points by June. It's just seeing price action and saying this is what the market's expectation is now. It's not the market expectation. The Fed have said nothing yet. So we need the Fed to come out and give some kind of indication as well from an FX perspective as to what the next sort of play is. But at the moment, the Fed are super tight-lipped. Let's see what that Euro US is up to. So yeah, we've got a reverse alert just gone in. So there is some US strength coming through, but nothing convincing. We'll hold. Powell talks later, does he? Oh yes, 4:25. So where is he speaking? Economic Outlook at the Society for Advancing Business Editing and Writing Annual Conference. Audience questions expected. What's going on? That's basically what I would say. Mr. Powell, what's going on? Yeah, so we'll see what Powell says later. Yeah, it'd be interesting to see what his stance is, but whether or not it will say much there, I don't know. We'll see. But so that's 4:25 this afternoon, which is a few hours away, isn't it? So that's kind of 2 hours after market open. So if you look at what happened yesterday, DAX is starting to push back up again. Just see what the US. Yeah, so stock indices are kind of pulling back a little bit here. So if you look at what happens at the open yesterday, obviously, whoops. Where's the open there? We just basically sold off and then sold off some more, but the market had already done the main sell, which created the gap. Obviously, that was the shock element in there. So the open today, I would expect, because we've had this massive sell-off already today, we've done 225% of ADR already on the US indices. I would expect just a continuation short today. Whether or not it's going to be bigger, we'll have to wait and see. But there's a couple of options today. Obviously, the market opens in roughly an hour. So if we're still sitting around here, because obviously NFP's done nothing, the two options are to push up into this propulsion move, which is China's announcement of the tariffs, or it's just going to be market's going to open and they're just going to sell. So at the minute, the fear and greed index is down at 11. Which means that the market is in shock mode. We are basically taking off all stocks, all risky assets, which is most stocks, and we're liquidating those into safe havens, which is why the Swiss franc is rallying and the yen is also having a pretty good day. So if that isn't over yet, that run to the safe havens, we're going to just get another flush today. There'll be a lot I would imagine, of managers, like fund managers, wanting to try and get flat, or trying to get positions where they need them to be, get the risk hedged everywhere, ahead of the weekend, because obviously this weekend you've got no chance of doing anything. So announcements are coming out literally every few hours. There's something coming out from some country or another with retaliatory information. So over the weekend, there's a lot of stocks which will be affected, and a lot of stock sectors will be affected over the weekend. Potentially, if European leaders come out over the weekend and say, we've got the meeting on Wednesday's when we're going to announce, but the plans are to do this with the motor exports. We're going to move them all into Mexico and ship them from Mexico over there because the cost of the tariffs is 15% less, whatever it may be. You've got no chance to react with your portfolio over the weekend, which means if there's multiple things which are going to move the US dollar in one direction or move a stock sector in one direction, Monday you're getting hit by a gap which will have put you into a loss position, followed by a down day, followed by a gap. So they're going to want to hedge their positions to make sure that there isn't any over weekend danger, because 3 days worth of movement happening on Monday morning is bad. Yeah, we don't get gaps this size very often. In forex, we very rarely get them. In the stock market, we very rarely get them to this magnitude. So imagine having 3 days worth of information that you can't act on. That loss is potentially an awful lot bigger. So I get the feeling that there might be quite a big rally in one direction or the other while they just sort of manage the portfolios. So I'm expecting some movement at 2:30. But we'll wait and see what happens. Non-farm payroll's done nothing, so it may be that we've seen the move, and the last 2 days is done. And now we're going to sit here and wait for the next lot of announcements to come through. But you have no idea. You can never tell. This market's driven by sentiment, and at the moment, the sentiment is nothing but that. So, long positions, you're just going to really struggle to get anywhere with them at the moment. I just wanted to see if the Fear and Greed Index has come out yet. It's not. Here we go. Trump, my policies will never change. Truth Social. Trade the next correlation breakout. Good luck. Is anything correlated anymore? So yeah, policies. So Trump's awake. So beware. He's awake. It's always nice in the UK. In the morning session in London, we get to sit here and go, we're safe. At least we can't get trumped. He's awake now, so just be careful. Tighten your stops. I thought there might be some bargain hunters, but I get it. How you can value a stock when the earnings are impossible to predict. There will be bargain hunters out there trying to buy stocks at these cheap prices, but there's I always use the Northern Rock example, which is Tom Hugard's got this in his book as well about the Northern Rock collapse. People, when they see a stock collapsing or a stock market or a stock sector collapsing, will assume there is value because it's cheap. Yeah. But cheapness does not mean value. Cheapness means devaluation. Yeah. In the stock market, when something is, and this is where we get the terminology overbought and oversold from with relative strength index and indicators like that and oscillators. When something is collapsing in price, it's collapsing in price for a reason. Stocks don't just tumble because the market decides to just sell a load of Tesla, sell a load of NASDAQ, sell a load of NVIDIA, sell a load of whatever. It does it because there is a fundamental reason that those companies are going to devalue, or those sectors are going to devalue. At the moment, every single business in the US is going down the pan because their costs have increased. Everybody's going to get poorer, which means that they cannot increase prices, because if you increase your costs and then increase your prices, people are priced out of the market and can't purchase your goods, which hurts your bottom line, which means you have to lay off people, which means people have got less money because there's less jobs available, which becomes a circle that gets bigger and bigger and bigger. And we call it a depression, or we call it whatever you like. But, recession, depression, whatever you want to call it. It's a collapse. So buying stocks in the motor sector now in Germany, the DAX, which is what a lot of the DAX is German motor stocks, is not a good idea, because the cost of getting a car from factory to seller, or buyer rather, has just gone up by 25%. Your car price hasn't. So what's happened? Your bottom line has dropped by 25%. Imagine in a business, you got something you buy for £50, you sell it for £100. All of a sudden, now you buy it for £75 and sell it for 100. 50% of your profit's gone. What's that going to do to your company value? So do you want to buy German motor stocks now? Not until those tariffs are off. When those tariffs come off, I'll be snapping up the DAX, and DAX is going to go through the roof. But until those come off, and as he's just said, right there, my policies will never change. He's not budging, right? So you can buy the DAX now, but bear in mind, you may have to hold it until he decides to budge. What if he decides to budge in 2027? What are you going to do with your DAX stocks? Hold it for a year and go into drawdown? Northern Rock stock price went down and down and down, and people bought more and more and more, and they thought this is the bargain of the century, and then it went bust. Yeah, stocks can go from anywhere to zero. Zero, you've lost it all. Yeah, there is a zero. Stock indices are a different matter, because stock indices cannot go to zero, because there's 40 stocks in the DAX, for example. And when one of those drops out the bottom, number 41 takes its place. There is always 40 stocks. And as long as your stock is underperforming, you will drop in the DAX index. And when you get to 40, you drop out the index and somebody else takes your place. Whoever's taking your place is usually performing well, which is why they are moving up. It's like a soccer league, basically. So this is why stock indices always rise. However, if you've got 200 companies that are listed, 40 of them in the DAX, right? And all 200 of these are performing badly, and all of these 40 are performing badly, who replaces them? Tiny little pink sheets. They're not going to perform well going forward. And this is where you get bear markets. So you look at the bear markets we've had recently in the US indices. But the last one lasted a year, and it was because of COVID. And why did we get that? Because the market artificially inflated after COVID. Yeah. Lockdown. All businesses producing zero profit, closed, cannot sell, cannot operate. Zero income. Outgoings, staff, still outgoings, zero income. Stock price through the roof. But we're not making any money. Let's just make the price higher anyway. Causes bear market. Yeah. Rally. Tariffs. Every business on the planet, costs going up. Bear market. But this is bigger than this at the moment. The drops we're seeing in the US dollar and the stock indices are larger than the initial COVID drops. So that may well happen at some point, but there is also a possibility of us going into the longest bear run possible. It won't go to zero, obviously. It's not possible to go to zero. But individual stocks can. Companies can go bust. Tesla, yeah? BYD in China, sales up 53% in the last quarter. 800 billion or million or whatever it is knocked off of Tesla's price. Yeah? Tesla will and can easily go bust, and BYD will just take their entire market share. So everybody's going, whoa, look at the price of Tesla stock. This is good. Northern Rock. Yeah, be very, very careful if you buy long-term stocks for investment. Some of these companies are not going to survive this. It doesn't matter how big you are. If people cannot afford to buy what you sell, you will go bankrupt. That's it. So, doom and gloom. Thanks for coming. Great buying opportunity long-term coming. Looking for 36,500 on the Dow. to buy long term. Why? What significance has a price point got in a collapsing economic market? Why is 3,600 relevant? What's that got to do with anything? Oh, sorry, 3,600. %20 from the high. So what? Why does that matter? I mean, it's going to bounce somewhere. You may be right. Past sell-offs, but past sell-offs have not been caused by this. Yeah, you can look at anything in the past, right? And history has got nothing to do with today, has it? Right? Show me a point in history where there has been an economic change in the entire planet. There isn't one. Show me a point in history where there has been a pandemic. We've got one. But go back to 2019 on your chart and show me a time in the past where we've had a pandemic. Show me a time in the past where the US has completely destroyed the economics of the planet. No, there isn't one. So no one can tell me where this is bouncing. No one on the planet can tell anybody where it's bouncing. No one can tell if it's going to bounce. Yeah, you can look at history. You can look at past things like you say, the housing market. You can look at the dot-com bubble. You can look at all sorts of things. This is not that. This is a totally different thing. Yeah. Nobody on the planet at the moment can make money. No business can make money at the moment. So the stock markets are never going to recover while that is in play, is it? It's just not going to happen. What is going to happen is inflation. Big events are needed for big sell-offs. 9/11, yeah, big. Yeah, all one-off events that lasted 2 days. This could last a year, 10 years. This could be the new start of World War III. Anyway, it's no point in looking at forecasts on anything. Yeah, I'll pick a point as well. I'll go there. I'll go 38,129 on the Dow. I'll pick one at random as well. Anybody else want to pick another one at random? Doesn't matter which one you pick. 49 watches and 6 likes. 53 according to my thing. I charge you 10% and you charge me 30%. How's that fair? Why can't other countries budge down on their tariffs? Don't know. Why can't the US not bully the world? Don't know. Just because it is, isn't it? There's no point in worrying about what has happened. Yeah, what has happened. It doesn't matter what you think of Trump. I think he's an amazing businessman. I think he's a really good businessman, but he's actually shit at running countries. You know, it's like, it's not hard to see, is it? Trump gets into power. Yeah. He's not good for the stock market. He's not good for business. He hasn't got a clue what he's doing. But at the end of the day, there's obviously a plan here. We know there's a plan here, and the plan is long-term growth in the US. But the short-term pain, nobody on the planet, I know people in America, and they were not told that their currency would devalue, 50% of their jobs would go, and all of the businesses in the UK, in the US, would suffer, and everything they buy go up by 50%. When they were voting for him, he didn't mention it. He said he'd make America great again. And he's got a really good plan to do that. He's going to get everybody in all the other countries so tied up in trouble importing goods that they're going to have to move their factories into the US. So in 2 to 3 years' time, if they can be asked, and that has happened, it will make America great again. But America's got to survive until then. And if you look at what's happening here, I've been trading for 18 years. That has never happened. Yeah. So this is not the norm, and this is not the way that you make America great. No one in their right mind can turn around and tell me that that is good for the dollar. The US dollar has had its largest drop in decades in 24 hours. Yeah. And this has come after a 2-month drop in the dollar. Right. So Trump gets into power, it drops for 2 months, and then it collapses. I'm sure there's a plan there, but unless he's going to tell us what it is, I'm going to assume that the rest of the world knows best. And that's basically what it is. So good luck buying the bottom. Yeah, I've also tried to catch falling knives in the past, and I stopped doing it. So it's just not going to happen, is it? Pick a point and buy it. If you can pick a point and buy it and hold it, it's great. And, you know, technically, this will get down to here today and bounce. And it may well do. And next week, we could well be back up here again. But the only way that's going to happen is if what's happened this week gets undone by banks and institutions. And to do that, they have to have their faith in the US dollar and the stock market flipped to from -11 to +90. That's what needs to happen to get this market recovered. And I can't see that happening in a week unless he pulls all the tariffs. But I love it. I think Trump's the best thing to, you know, I've made more money in the last 5 weeks than I've made in my entire trading career. It's fantastic. I've been buying and selling stuff as it starts to move, and I've held it, and I've made a fortune. Brilliant. I love Trump. He's amazing. He's really good for trading, but he's absolutely terrible for the US. People in the US are looking to move to other countries, basically. I understand what you're saying, but Trump will come out one day soon and brag about deals he's done. Yep, true or false, and the market will rocket. Yeah. This is it. I mean, if you position trade it, you've got to survive it. This is the thing. If you buy it now and you scale into a position and hold it on the assumption it's going to V-shape recover, which it does, yeah, you know, there's a good chance we're going to get a 50% retracement on the leg. But then I don't think the leg is going back up there. You know, there's no one can buy the dollar at the moment. You can't buy into an economy which is collapsing. It's just not possible. For most economic minded people, that's, you know, us retail traders, they do all sorts of things. Doesn't matter, does it? Because we're doing short-term stuff and we can't move the market. But banks and institutions and investors, they won't touch it with a barge pole, the dollar. Yeah, unless he comes out with a plan that makes America great. And it doesn't, because it just collapses. Every economist is saying the same thing. It's a shit show. It's going down the pan, unless you change it. But, you know, it's one of these things. If there is a plan, he's keeping it very well under his toupee, isn't he? He's keeping it under there, and he's going to come out and go, ta-da, April Fool, no tariffs for anybody. And the momentum will skyrocket it further than it's ever gone before. Maybe that's the plan. Trying to make trade fair. Trade is never fair. You can't make trade fair. Trade is one-sided. Otherwise, it wouldn't be trade. Yeah, that's what businesses do. It's not fair. It's business. I give up. Trump gets the market moving like nothing you've ever seen, yeah. This situation is man-made by one man. Yeah. He changes his mind, which he will, and everyone will regret not buying stuff. Yeah. It's, you know, this is the thing. It's, like I said this morning, there's absolutely no point in running any strategy, technical analysis, indicator, you know, nothing's useful at all. Absolutely nothing is useful at the moment. Price action, useless. Yeah. You know, there's just no point. If this turns into a 3-bar reversal, short it. Probably not. You know, just nothing's going to happen normal until the situation's calmed down. And that's the key. That is the key question: is when is it going to calm down? You know, and it's got to be based on what he does. You know, it's like it's the one-man show in the world, isn't it? He literally is completely controlling all financial markets at the moment. His wealth, I read this morning, has doubled in the last 12 months. Doubled. And we now have 15 people who are trillionaires or multi-trillionaires. I don't know. But basically, in the last few years, we've had this wealth funnel growing where we've basically had all the money from the entire population going down into 15 people. And that's it. And these people are just getting richer and richer and richer and richer and richer. So maybe this is a master plan, and it's the final exhaustion candle where they buy everything. And then that happens and everybody's stuffed and they have all the money in the world. There's a conspiracy theory to go off and think about over the weekend. Dump Tesla stocks as low as you possibly can, and then release the virus into the BYD cars that all crash, and Tesla's stock price goes through the roof. There's all sorts of things they could do, isn't there? Very clever man, Elon Musk. I love the Daily Mail headline yesterday, Nightmare on Wall Street, yeah. It is, like I said, I've never seen this. I built this dashboard years ago. I've just never seen this. Never seen it this red. In a week. I've never seen the daily. I've seen days where we've had, something like 9/11 would happen or something would happen. And you have a day where, you get a load of stuff hitting 150, a couple of 200, 300 ADR days. But the entire market, 2 days on the trot, to be over 200, 500, 600% of ADR, hundreds and hundreds of percent of weekly ranges done within 24 hours is just never seen it. 200% of the monthly range 4 days into the market. Indicators just useless. There isn't one that's going to work at the minute. Gap fill is underway on the DAX. So propulsion gap is about to get filled. I'll just put the DAX here and then you can see them. There we go. So there's your propulsion gap on the DAX. I'm just going to get rid of the ADR indicator for the minute because it's just pointless. ADR just doesn't exist. So there's your propulsion ad. So if you believe that the stock market is going to open bear today, there's your sell point on the DAX. So I'm just getting out of my DAX. I had a hedge on the DAX, just needed to exit. So yeah, potential short. But we'll see where we go this afternoon. As always, key is money management. Timing is the issue. Yeah, timing is the issue here, definitely. There's no way we can time this today, but anytime really. Did you pause your trading besides indices? Yeah. There's no point in trying to do anything else here but breakout. So I've been running a breakout strategy for the last 6 weeks, 7 weeks. This is another small account that I've got running, which is kind of one I was going to set up as a signal, but I haven't, which is live testing a new EA I've been developing. As you can see, it's up 40% in the last week and a bit. This is all I'm doing, breakouts at the minute. Literally no mean reversion, just breakouts, because that's all the market is doing. It's breaking out of everything. So as soon as you get any contraction in range, buy or sell the break and you're off. I'm done today, 11% up. And that was done by, don't know what time that was done by. 11:20 this morning. Yesterday I was done by lunchtime. Day before that, I think I was done by lunch. I haven't traded the US session at all. Haven't needed to. Could have made a lot more on buy and holds, but you've got to have a line somewhere, basically. But that's all I'm doing at the minute. You can't I'm personally not willing to get involved in any long-term speculation on anything with this. This is just not something you can predict future movement on. Everything I do is based on historical research. So everything, every system, every strategy I have is back tested, robustness tested to death. Yeah, and that's what I've done for the last sort of 5-7 years. I've been solidly trading strategies that have been very successful and worked. But when you see this sort of thing happening, there is no precedent. So if you can't find a precedent in the past, you cannot build a strategy on past price action, as I was just saying. This has never happened before. We've had big moves in the market on housing collapses, but everything that you see in the past has a reason to be undone. This is different because this is a change. This is where China and Brazil and India take over from the US dollar as the world's currency. All of these stock markets that we're trading here are priced in US dollars. If BRICS is taking over, there is not going to be a recovery necessarily, or the recovery will be in a way that we haven't seen. We were talking this morning about what takes over from the US dollar. Is it crypto? Is it some other currency? The yuan, fastest growing economy on the planet. Why aren't we trading yuan? There's all sorts of things that can change from here. So long-term speculation in forex specifically is based on interest rate direction and interest rate futures. Interest rate futures, no one's going to be able to tell you what's happening with interest rates because we can't tell what's going to happen with inflation. We can't tell anything at the moment because right now, as of Wednesday, every single business in the world has had their bottom line slashed by a minimum of 10%. So what do you do with that? Yeah, everything businesses buy is going up. Everything businesses sell is going up, which means that consumers get the buy and the sell put onto them, which is double the inflationary cost. If I've got no money, I can't spend money because I need to put it on bills like mortgages, borrowing, food, clothing, everything else that you spend your money on. If my company that employs me is losing their bottom line because I can't spend money with my company has to lay me off, which means I lose my job. The spiral gets bigger and faster. With things like the dot-com bubble, the housing bubble, and COVID, there were firm recovery plans in place, and there was a way you could see for everything to be sorted. Yeah. With this, there's no, at the moment, understanding of what a new world order is going to be to do with trade. We don't understand how we're going to suddenly go from spending this to this on defence in the UK. We can't do it. Yeah, Rachel Reeves has come out and said, this is the plan. And then the day after she said the plan, Trump ruined the plan. Europe, we've now got to find extra spending. We've got to also support Ukraine more. So we need more money. So we're going to have to borrow more money. So the euro will fly because the bonds are going to be released and everyone can buy the bonds. But who's going to buy the bonds? No one's got any money now because everything's gone the other way. So you just don't know long term whether or not we're going to move into a market which moves this fast or a market which returns to moving this fast. Yeah. And we don't know how much speculative money-making movement will be put through forex markets. So the whole reason position trading works is based on bank and institutional cycles. If those don't exist anymore, it won't work. So I need some reassurance from the market that we're going to start to return to norms. So when these ADRs start to get back to levels of normality, then you can start to look at using strategies based on historical normality. We haven't got it yet. So like I said, flat is a position and it's the best position to be in. Scalping is the best thing to do at the moment. You drop down to any time frame, low time frame, like 5-minute charts, flip a coin, press the button, put a 1 risk and a 3 reward on it, you will make money because the market will go. Don't put a 3 reward on it, put a 10 reward on it, a 15 reward on it, whatever you want on it. Some of the trades I took today, or rather the EA took today, could have made way more. These shorts here, that short there, yeah, I left loads of money on the table on the shorts. But, you know, you can't just sell and hold and hope for good. When money's presented, take the money at the minute. Get in and get out. Get in and get out. Because if you get in and hold and it comes back, you won't make the money. If you get in and get out, you can get in again and you can get in again and get in again. Just keep getting in and out, in and out, in and out. If you put a moving average on, you know, it's like the old, you know, they teach you in the courses, isn't it? That you use moving averages to trade. I'm just trying to see what template I've got. Let's do normal. Stick a normal MA on. 9 will do. Probably more like a 20. So if you use something like a short-term moving average, like a 9 is more of a signal. So use a 20, which is a short-term trend. If you just sell every time it crosses the 20, that's a good strategy at the moment because this market is trending and it's probably going to remain trending. But you do not go long, obviously. You only go short. Yeah. So the next time that closes below, short, hold it. And when it comes back above it, buy it. Exit your position. So your entry, exit, reward. But a better way to do it is to get in, get out, wait for it to pull back, get in, get out, wait for it to pull back. So you wouldn't even got in on a pullback on this. This is the trouble. This market doesn't even pull back, allowing entries, does it? There goes my strategy. That's what I used to trade. I used to trade a strategy called the Strat Shadow, which is, I don't think I've got. It's this. I haven't got it on a daily though. I haven't got it on anything but a daily. But basically, all the strategy is, and you can use this on any time frame. Obviously, I've only got the indicator on the daily, but this is basically a slow moving average and a fast moving average. Doesn't matter which ones you pick, but basically you choose 2 moving averages, and you basically buy when you're in the shadow. And the shadow is the space between the moving averages. A bit like an alligator strategy type thing, but you've only got 2. So you just buy it down here, and you sell it if it closes below the slow. That's it. So you basically wait for it to get into here, you buy it, which is usually going to be some kind of retracement. It's all based on the same stuff. It's all Fibonacci. It's all pullbacks. Everything you see. I can show you entries on this and then remove these and put a fib on, then you get the same entries. Yeah, it's all the same stuff. Everything you learn is the same stuff. Market structure. That's what it does. It moves up and moves down. So you buy it, you keep in it, and you sell it. And then you wait for it to cross back above. You buy it. You could have bought it there. You could have bought it there. You could have bought it there. It doesn't matter where you buy it. But if it closes below there, you sell it. And then you wait for it to push back up again. But we've got a directional bias at the moment. Obviously, DAX is we're short. I'm not going to long it. The same with all the US pairs. Short them. Stay in them. But short time frames. Do this on these time frames, and you'll be in and out, in and out, in and out. You once you're in and out 3 to 5 times. I don't know how many trades I took today. What's today? The 4th. Yeah, so this is, these are all today's trades. But these are all the trades I've taken today. Is that it? Must have taken more than that. Quite a few actually today. But you know, all you're doing is you're waiting for that move. So you're gradually building money as you go, and you're just waiting for that move, waiting for the vroom. And that's where you get paid. And take it and stop. It's going to happen every day because this market is volatile. You just don't know which way it's going. long term. So short term, doesn't matter which way you trade, just trade in a direction and you'll get it. But I left loads on the table today. But yeah, that's what we do. Unfortunately, leave money on the table. It's the norm. How about we charge 60% and you can charge us 30%? Do you think that would be fair for you? Yeah. Yeah. If it works for us, I wouldn't be yelling from the mountaintops. If it works for us, it works. Trump doesn't understand trade deals. That's the trouble. It's he's been happy with the deals in place. But what he seems to miss is like China charged 700% on rice. But what he doesn't really seem to understand is America doesn't need the rice. That's why they charge 700% to stop the transaction. It's a barrier. It's not a tariff. It's a barrier. It's to stop you doing it. So hitting it back at somebody for something you don't need. He's put tariffs on islands that don't have populations. I thought Biden was going a bit loopy. Will that new 007 EA be released soon? Maybe. Yeah, I'm still working on it. But yeah, it's got some ironing out to do. But it's I think it's there, but I need to test it live through some calmer markets. So I'm going to build the MT5 version of this and try and back test it on multiple currencies in MT5 just to see how it operates in a portfolio environment. The problem I've found with the way that I had it built is it uses a maximum lot size. And this is part of the problem we've got with the opening range breakout EA at the moment, which I've discovered it's not a bug, it's just a circumstance where if something happens, it doesn't quite do what it's meant to be doing. It does work fine, but it could work better. So it's kind of an enhancement that really needs to be made to it. But the problem with the prior version of this was it was working on lot size rather than on risk amount. So this has all been fine-tuned to work on risk amount of money rather than lots, because the difficulty I found with this is the lot sizing is very different on different instruments. So for example, on the DAX we'll be taking trades at 3 to 5 lots, and on FX we might be taking 0.07s and 0.1s. So setting a maximum lot doesn't work, and that's the same problem I think is what's happening with the opening range breakout EA in certain instances, which I've only discovered this morning. So this has been kind of fine-tuned, if you like, to work on risk. So I need to rebuild this into MT5 so I can properly test it, rather than me going through a whole forward testing of 2 months, which is what I normally do. I'd like to be able to just whiz through it in MT5 and test it. But yeah, it's close to being ready. But I need to test it through some different markets. I want to test it through a bull calm, a bull quiet, and a rangy market, and in a bear market as well. So there's obviously periods of time we've had over the last 5 years since COVID where I can pretty much test every market condition under the sun. And if we go back to 2019, we can test high volatility as well. So there's lots of periods I've got which I can test it on now. But the live testing obviously is fantastic. So it's just a case of I need it to be right and working properly before I release anything. So I'm going to get rid of that DAX trade because I don't want to use that today. We've got 4 minutes to the open, so I'll hang around until the open. and we'll see where we go this morning or this afternoon. Afternoon, Mark. Thought the Aussie dollar was looking like it might recover, but it's struggling. More yen strength coming through. Look, see what that US does. So yeah, market's opening in 4 minutes. So we'll watch the. There you go. So anybody get on that short? So we'll watch the. Let's watch the NAS at the open as well, because that's likely to be the most volatile. Be interesting to see if Nvidia does what Trump wants him to do. So a lot of these big companies apparently have agreed to move manufacturing into the US, which is obviously his master plan. But it'd be interesting to see what they do, whether they actually do it, because there's a lot of planning and talk that's behind all of this this movement. But companies have actually got to do it. And I was saying the other day to a guy I know at the gym, it's all very well saying something, but you buy the rumor, you sell the news with these sorts of things. And Trump saying we've got lots of companies agreeing to move into the US, which is we're gonna build factories, we're gonna employ people, we're gonna manufacture stuff, we're gonna sell it in the US, and we're gonna make money exporting it. When Nvidia sit down, or whoever sits down and goes, so if we shut down the South Korean plants and we move it over here, the cost to us as a business is 22%, and we're going to take 6 years to recoup that, and the benefits are going to be 3% long term. So in 20 years' time, we'll probably come out at break even. Do you think the board of Nvidia are going to go, yeah, let's go for it? Or do you think they're going to sit there and go, doesn't make sense? China's up and coming. Why don't we move it there? Yeah, so there's an awful lot hinging on his plan working at the moment. Like, a lot of industries and sectors have got to fall in line. So be very interesting. And NASDAQ, obviously, the tech sector, obviously one of the hottest sectors out there at the moment, is telling you that it's not particularly faithful in it. Well, hasn't got any faith in it. But we'll see. We've got 50 seconds till open. How much have I made this year? Don't know. I haven't added it up. Not as easy for me because I have lots of accounts, and I don't work on that in that way. I don't have a capital in an account and I make a percentage on it. I make money. I don't look at it in that way. Position trading down dramatically. ORB up huge. Scalping up huge. Needs must. It's a very funny thing, trading. I think I said it was in the member stream yesterday. It might have even been this morning. You adapt to what is going on. So markets open. So as a business, which is what I am, you change with the market. So if you sell mobile phones and Apple is the #1 mobile phone, you align yourself with Apple. If all of a sudden a new phone comes along that beats Apple's, you align with that. You change, because if you stay there, your sales will drop. Yeah. Position trading's been fantastic for 4 years. More than that, 5 years, 6 years now. I've never had issues. I've never had down years. The last 6 months, my P&L has stagnated or dropped constantly. And it's nothing has changed for me. I haven't changed the strategy. I haven't changed the way that I trade. I haven't changed anything. The market has changed. The way that the market moves has changed. So you adapt to the current market. This is Apple. This is Samsung. Apple's not doing what Apple did for the last 5 years. So I'm now on Samsung's side. And at the moment, volatility breakouts are what is making more money than long-term mean reversion. However, short-term mean reversion will work very well when the market calms down as well. So you just move. Enough for a holiday. Depends how much your holidays are. I shocked somebody the other day. I don't know what anybody else spends on holidays, right? But I went on holiday last year, and I said to one of the guys again at the gym, I was moaning because I said, oh, we'd just been on holiday to somewhere we'd been before. Last time we went, it only cost us $7,000. This time it was 12. And I was like, the reaction I was expecting was, huh, it's terrible, isn't it? The reaction I got was, what? I was like, yeah. It's like went up by more than 50%. And I carried on. And it was like, and it wasn't until I got home that I suddenly realized that his reaction wasn't, holy crap, that's gone up that much. His reaction was, you spent $7,000 on a holiday? And this year you spent 12 on one? That's the norm for me, right? So what's a holiday to you? Some people I know have just been away on holiday. They spent £900 and got a bus from the airport to the resort. Yeah. You make what you need to make, and you adapt and make what you need to make. And this is one of those industries and one of those jobs where you can make enough. This morning I've made enough by 11 o'clock that I don't need to carry on working for the day, which is why I'm streaming. But other people will be trading away trying to make even more. So you make what you need to make. If I have a massive run for a month and make enough to pay my mortgage for the year, I can sit back for the year and do what I like. That's the way I look at this. This is a lifestyle business. It's not something I have to do 9 to 5 every day or I'm stuffed. I make money when the market makes me money, and the market decides when it's going to move and how it's going to move. So I just make sure that I put my money into the market in a way that it's going to extract some money from it. But the amount you put in and how you put it in and how you get it out is entirely up to you. And what you need to get out of it is entirely up to you as well. There isn't a, I have to make X. I always double what I've got available every year. That's the way it works. But I don't try and treble it, because trebling it would be more work. And unlike most people, I don't want to sit there and work all day long. That's not what I do it for. So I don't know. Different. And I also don't have all my capital there. You know, you don't put everything in one basket. You put everything in different baskets. This is why we have different strategies. Nasdaq's starting to reject any kind of upward movement. We're only 5 minutes in, but looking like it doesn't want to work. We've got US dollar strength starting to creep in as well. Very, very weakly. Inside bar on the US dollar Swiss on 5. So not a lot of movement. So, okay, so it's a whipsaw open. So there's no strength at the moment in any direction. So we'll see where we go. But it looks like we might be breaking to the downside. We've tried a little bit of long, tried a little bit of short, haven't gone anywhere. So this break hopefully will be a decent break. See where we go. Sounds fair. I also usually work 1-2 days a week for trading. It depends how you trade. Trading's not the sort of job that you get a weekly salary. You don't get a monthly salary. Yeah, sometimes you know, I have down months. I don't make any money in a month. You take the money when the money's there. It's a bit like being a director of a company. You take a dividend. You don't get paid. You get paid salary, obviously, as a director, but you don't make your money out of being a director. The director of a big company will be earning 30, 50, 100 grand, whatever it is a year, but their bonus will be 1 or 2 million or 500 grand or 250 grand or something. They don't look as a salary as an income. You look as a salary, it just pays the bills. It's the same as this. You look at your P&L and you draw money out every 2 to 3 months, and that lasts you for 2 to 3 months. It's like being paid irregularly. It's like being on a 0 hours contract. You sit there for 3 weeks waiting for work, and all of a sudden they come and say, I've got 80 hours worth of work. Can you squeeze it all in 40 hours for me? Yep. That's when you get paid. You get paid when the market pays you. If the market sits like this for 3 weeks, I covered this in the member stream about different strategy types, the 3 different strategy types: mean reversion, breakout, and trend. There's only 3 strategies on the planet. If you are a trend trader and the market sits like this for 3 weeks, you do not get paid. When the market does this, you get paid. You do not control when you make money trading. The market controls when you get paid. Yeah, if you are a mean reversion trader and the market does this for 3 weeks, your P&L goes through the roof. When it starts to trend hard in parabolic mode, you get paid nothing. Yeah. So if you have multiple strategies, if you have a mean reversion strategy running alongside a breakout strategy, running alongside a trend strategy, it doesn't matter what that symbol is up to, you have revenue generation. If the market is in a market structure trend, you get paid on mean reversion and you get paid on trend, and you possibly would get paid on breakout depending how you did the breakouts. That's when you get your money. So the market spends 20 to 30% of its time doing that. That's when you make your money. So you're going to have 2 or 3 months a year where it's just nothing's going to work. You're going to bat your head against the wall. You're going to be break even up, and then you're going to have a few months a year where your P&L just goes through the roof because the market volatility hits. And whatever strategies you're trading, the market conditions match the strategy. That's where you get the cash. But you don't choose that, which is why you need a minimum of 3 months capital in your bank before you can become a trader. Yeah, because you're going to have to survive for 3 months and pay those bills before you get paid. You may get paid on month 1. Yeah, so if you went full time, gave up your job today and started on Monday as a trader, from Monday until the end of this month, you could have a fantastic month and go, brilliant. You'll pay your mortgage, you pay your bills, you pay your car, you go out, you buy food, everything's fine and dandy. If from Monday until the end of this month, your strategy hits a brick wall and stagnates, how are you going to pay the bills? You've got to have 2 to 3 months worth of whatever your monthly outgoings are saved in a bank before you can do the job. It's the same as a business. You can't start a business with 0. You have to have capital for your shop, for your advertising, for your staff, for your stock, for bills, for everything. Yeah, this is a business like any other. You don't get paid when you run your own business as an employee. You get paid when your customers pay you. This is your customer. The market, whichever markets you're trading, they are the customer. Customer pays you when the customer pays you. If the customer decides today wants to come in your shop, walk out your shop, come in your shop, walk out your shop, come in your shop, walk out your shop, and do this all day long, you ain't going to get paid because they're not buying. If they're not buying, today's a loss. If your strategy is a breakout, if your strategy is mean reversion and buying the highs and the lows of every candlestick, and the customer does that all day long, you get paid all day long. But what's it going to do? Don't know. No one can see the future. So you pick one. I'm picking to go short because that's what I'm seeing happening. Well, that's what's happening, isn't it? But with trading, I earn a little bit more than my 9 to 5 job after tax. Yeah. But you can either do this as a lifestyle, or you can do this as a mix of both, or you can do it as a full-time thing. There's a million ways to do it. I started part-time, and it was a long time until I was consistent enough to say, I think I can actually match my salary with this. And when I matched my salary over a quarter, I was like, right, let's go. I went too soon, but it worked out. But you don't, you don't have to do it that way. Yeah, you can do a part-time job, knock your full-time job down to a part-time job and do this part-time. It will focus you so much more if you actually need it than if you want it. Yeah, everybody wants this to break short now. Yeah, if you need it to break short, you will focus a lot more on what it's doing, which will make you better at trading because you will be focused. If you're not worried about it, you will let the EA do its thing and you'll go out and walk the dog. I don't do that. When the markets are open, I'm watching it. I have an EA trading for me, but I'm eyeballing this. And if I don't like what I see, I'll take the money. Yeah. If I didn't need the money, I wouldn't take the money. I'd let the EA just do its thing and let the edge play out. And some days, most days, it's better for me to do that. Got 2.5 minutes till this candle closes. I'm just checking the P&L because I've got a loss to recover from this morning. Has anybody got any other pairs or anything they want to look at? Not that I can really give you any guidance, but if you've got anything you want to look at. Do I have any free EAs? No. But I will say, if you can't afford 50 quid, no point. Anyway, is there? I could give you a free EA, but I won't tell you how to use it. I won't spend 8 hours a week streaming, educating, doing all that. You're paying me by buying my EAs for me to show you what's going on and how it's working. Most free EAs are worth exactly what you pay for them. That's all I'll say. Just going to take a partial. I'm taking a partial on all three and just removing the partial targets because I've got a loss from them this morning to recover in case this doesn't play ball. I just want to get that loss minimized a little bit. Might be the wrong thing to do, but I kind of like to end on a totally green week and month, which would be lovely. This is the problem at the moment with trading. My expectation is for a recovery. Just because that's what I've seen happen for the last 20 years. This is unusual trading in this because these movements are so big and it's very hard to let something run for a long time because you're not used to it. It's very, very unusual for it to be running that this strongly as it is at the minute. And every single twitch scares you because you know how fast it can move in the opposite direction as well. But anyway, so partial taken, and I'll let the rest of that run and see if we can get maybe another K out of today. Would be nice. If you have an ORB play, do you use the first 15 minutes? I know some like 15, some like 5. I use whichever works. So this EA here is the opening range breakout version 3, which is on the website. So go and watch the video on the website. It explains the strategy. There. That explains the strategy. It's a very short video. It's only 6 minutes long. But basically what this does is it analyzes the range based on ADR. And if the range is within the Goldilocks zone of decent back-tested ADR ranges that tend to work, it will trade it, and it will check every 5 minutes. So it checks the 5-minute ORB. If the 5-minute ORB is successful and it's in the right range, it will take trades. If the 5 minute doesn't break, it will adjust to the 10 minute, and the 10 minute will obviously be the same as the 5 minute because it would be an inside bar if it hadn't broken. So, but if it does break, and then it stops out straight away, it will test then the 10 minute range, and then it will test the 15-minute range. If within 15-minute range, 15 minutes, we haven't established a correct range based on ADR, it will leave it and wait 30 minutes for the first TPO to be drawn. So the TPO is the time price opportunity, which is the first 30 minutes of the open before the initial balance. So it will then take a 30-minute break. So if one of two things happens at the open, either you get a volume breakout and continuation, or you get a volume breakout and retracement because the volume drops. If that is the case, what you're doing is you're creating a 30-minute TPO, and then what the market will tend to do is break the TPO and go after 30 minutes. So it uses a 5-minute range. There we go, stopped out on those. It uses a 5-minute range, a 10-minute range, a 15-minute range, and then the 30. If it hasn't found a range in the right range within 30 minutes, it stops. That's it, we're done. I'm going to stop out on these. So that was the right choice to take a partial. So it's just going to put me back to where I was this morning, which is a loss. So we'll see if we get a break in the opposite direction. Could be a choppy one today. Little bit like this morning's price action. Little bit of a move and then no movement. It's hard today. Market's scared, obviously. So this could well just be a pullback continuation short, in which case this is where you want to be selling it right now. We will see. I think I'm going to stop out on that as well. You bought mean reversion EA and breakout EA. Do you have trend strategy? No, I did. So I developed with the members in the member stream. I developed an EA for trend trading the yen pairs, just because obviously the yen pairs are a carry trade. But now, as soon as I developed that, back tested it, I did all the work on it for months, got it fully back tested, robustness tested, out of sample tested. It was brilliant. Put it on the charts, and what did the Japanese do? Increase interest rates for the first time in 2 decades. So the carry trade is no longer there. And then just after that, they intervened. So that strategy isn't going to work long term, because basically it was based on the carry trade and the fact that the yen trends. What a stop out! Look at that. It couldn't have stopped me out at a better spot. So just holding the S&P short at the minute. So yeah, I haven't at the moment got a trend strategy because I as I say, I've been doing this a long time. I have never found a trend strategy that works consistently without a zero sum at the end of it. The problem with trend strategies, they work in this type of market, obviously, but this type of market is incredibly rare. The problem with trending strategies is by the time you've identified there is a trend, you've missed the move. Okay, so this market here has broken to the upside. You've broken up those highs. You've got a breakout. So we're taking a breakout on it. With a trend strategy, you wait for a pullback to enter. What happens the vast majority of the time is it will then fail to go higher and come back into the original range that is forming. So it's a price discovery failure. Yeah. So most trends look like they're about to start and then fail. Yeah. If you get a trend that works, by the time you get into it, it's already done 50% of the trend. So your job is to try and take a little bit out of the trend. So you only ever get, usually on a trend move, 30 to 50% of the actual move is all you will ever manage to bank. Because the strike rate on trends is 20 to 30%, because that's what the market does, it ranges for 70 to 80% of the time. You only get 20 to 30% of those trades working out. the strike rate's always 20 to 30 on a trend trading strategy that's successful. It means that every time you enter a trade, you've lost 2 trades. So you need a minimum of 3-to-1 risk-reward ratio to make money. Yeah. If you've missed, by the time you get into a trend, a third of the move, what have you got left? 2/3. So the chances are, on a successful trend trade, it will first of all take 3 or 4 times longer than a normal mean reversion or breakout trade. And the risk reward, although yes, you go for those 10 Rs, reality, the number of 10 Rs you get is tiny. So a lot of people will say they are a trend trader, and they will get into a trend here, and they will get out here, and they will get into it here, get out here, get into it again here, and get out here, and they'll say they're a trend trader. They're not. They're a breakout trader. What they're doing is they're waiting for the market to pull back, accumulate, and break. So you're actually a breakout trader. You might call yourself a trend trader, but breakout traders make good money. Mean reversion traders make good money. Trend traders, very difficult. So I've never managed to develop a strategy. I've got breakout strategies at work, mean reversion strategies at work, loads of them, hundreds of thousands of variations of them. But trend trading strategies, I've never managed to develop one that is actually consistently profitable. Only works in strong trending parabolic conditions, and the yen is the only thing that's ever matched that in history. You get instances like the pound US dollar where you're going to get this sort of move, and that will work. But you got 3 months out of 12. So what do you do for the other? Yeah, like I said, 30% of the time it will work. 70% of the time you just won't get started on it. Yeah, you might take a trade and you'll stop out on it, or you will get it with a 3R return, which will take you 2 to 3 months. Yeah, I like to be paid. So on low time frames, trend trading can work as well. And you can't look at any of these markets at the moment. They're just pointless. But, you know, this is what I mean. This is what the market does 80% of the time. So what are you better off being, a mean reversion trader or a trend trader? Every day, mean reversion. Support, resistance, supply, demand, propulsion gaps. Trade out of those. Take breakouts. Yeah, on low volatility breakouts. That's all this strategy is doing. This one here. That's all this is doing. It's waiting for market contraction, then it's trading market contraction breakouts. Very, very simple. Yeah, market pushed up, contracted, shorted it. Yeah, you might call this a trend trade. It's not. It's a breakout. Still in one short. It's going to be one of those horrible days where we get stopped out just before the move, isn't it? Really tempted to take a manual short on this. It does look like it's going to short. Just not getting anywhere, is it? Good afternoon, Trip. Can the open range EA be used on forex opens? You could probably answer that question. Let me ask you a question then. What time does the forex open? If you can answer that question, yes. Okay, DAX rejecting upside movement. Sorry, NASDAQ. Wrong session. I'm not used to doing an afternoon session on Friday. Normally on a Wednesday. Am I wrong, or are Aussie and New Zealand just moving opposite to the stock market? Whenever the market drops, they rally? Yes. That's the Australian dollar today. That is the stock market today. They're both going exactly the same way, down. I wouldn't look for correlation. I mean, if you're looking for correlation, correlation doesn't really help you anyway, because all correlation does is show you what has happened. So if you've got currencies which are correlated, like the obvious correlations you've got are things like the euro US and the pound US. They do the same thing, yeah, most of the time. Yeah, a bit more extended today on the pound, but they do the same thing. But that doesn't help you because if these two move together, when you see one moving, the other one's moving as well. So it doesn't help you unless this one moves later than the other one. So you can use correlation arbitrage if you like, but it's very unpredictable. So I don't think there's any point at the moment in looking at any correlation anyway, because these markets are in complete turmoil. They just don't know what to do. So, look, so we push up, we sit around, we push up, we sit around. They do the same thing, push up, pull back, pull back. So things are moving in correlation, but less so than normal. Stock markets normally go down when the US dollar goes up and vice versa. They're both collapsing at the same time at the moment. So if you're a correlation trader, that's gone out the window. It's all very different at the moment. It'll change. It will all come back to normal. This is the thing with these markets. They go nuts and then they return to normality. But it's how long is it going to take? Really good rejection upside on everything at the minute. So we've got a lower high gone in, a symmetrical triangle formation. We've got a higher high gone in with a rejection and another higher high rejection there. If we get an inside bar here and the next candle breaks south, we're off. But it looks like it's going long. There we go. So I'm going to stop out on that one as well. Dud day today. This is the first down day on the ORB. It's ruining my week. So let's just hope we break long and we just go for it. So if we are going to break long and this market is rejecting the downside, I'm increasing my targets upside into propulsion. So this is the Chinese tariff announcement, propulsion gap. Yeah. So if we do break upside on the open today, I'm going to head up there for my first target. Not quite. Almost triggered long on the Dow there. This could be just one of those sessions where we just go into rotation and it just hemorrhages cash. I got a feeling. So you prefer actively dynamically managing trades over set static TP and SL? Yeah. Personally, but I've done a lot of back testing. Oh, God, look at this chop. Just immediate straight in and straight out on that Dowlet. It's going to stop out. It's going to be one of those sessions today. I've done a lot of back testing. If you join the members stream, there's an entire week of how to strategy test, robustness test, out of sample test, how to build a strategy basically and test a strategy's robustness. I've done a lot of that, and every single strategy that I have developed in the past that uses a static TP and stop loss has failed. There isn't one anyone can show me that works on static take profit and stop loss. You have to use dynamic ranges. If you don't use dynamic ranges, you're dead, because when something trades at 400 pips a day and then in a year's time it's trading at 200 pips a day, you're going to get stopped out. Other way around. If something's trading at 200 pips a day at the moment and it suddenly starts trading at 400 pips a day, you're going to get stopped out twice as quickly and twice as much. So you have to adjust your strategy dynamically. Otherwise, it just doesn't work. And every time you introduce something like ADR to measure or ATR to measure movement, suddenly everything starts working. Trip, I'd say after each daily candle. Wrong. Is a new open. No. FX market trades 24/5. It does not shut. There is no open on the FX markets. The whole edge of the opening range breakout strategy is we know to the second when momentum is entering into the market. In the forex market, you have no idea when momentum is entering into the market. There is not one candle every day that is the same momentum. Yeah. So you cannot trade the open of the forex market. There isn't one. People like ICT will tell you there's a kill zone. Yes, there is a time when it gets busy, but that time is different every day. I know people that work in banks and I know how they operate. I know that they turn up to work half an hour late. They sit down, they have a coffee and a donut for 2 hours until they press the button to execute their orders. Yeah, you can't time anything in forex. Plus, a vast majority of forex transactions are OTC transactions, over the counter between banks. So if there is a requirement for your strategy to work on large volume of orders and 90% of today's orders go OTC, you won't even see the volume, which means you can't trade it. It doesn't work. You can, and I am, trading volume breakouts in forex, but these are untimed. They're based on contraction expansion, not time. This is a variation of the ORB strategy that works using volume and momentum. So you can do that because you don't need to time it. This is just utter chop today. Bloodbath. So 30-minute ORBs are in. Range is wrong. Ranges are wrong at the moment anyway because of ADR. But I will take a long on the S&P. Why is the 30's not gone in there? Because I was already in it. That's annoying. So there is a 30-minute range break available on that as well. I'm just going to leave it today. So it's going to be a down day. Look at that. Down day. I am human. It's not yet, is it? Because if that breaks long and that breaks long, it's going to be an up day. But trying to get a long break on a market during a collapse, probably not the best thing in the world. Have you ever thought about trading JPN 225? No. I'm asleep. So I wouldn't trade it. I would sleep. Which of your EAs would be best for forex? The ones that work. I can't answer that question. Everything works in forex. This will work in forex if the market decides to move when the stock market goes. Look, so go and look at an FX pair now. All right. Let's choose different FX pairs. Let's choose US dollar yen as well. So draw a line at the open. So an opening range breakout today on this would have been 5-minute, failed. 10-15 minute, you're broke long and you're off. So this is a lovely successful opening range breakout strategy with the ORB EA version 3. Absolutely perfect. Look, we're off, we're running, you're in profit. ORB on this one was your 5. So your 5 would have broken long and stopped out and then broken short and you're off. Tick. So if you'd have traded the pound US dollar and the US dollar yen with the opening range breakout strategy version 3 today, you've got 2 beautiful winners with 1 stop out. Very profitable day. You're asking the wrong question of which EA would be best for forex. This is all a market. If I hide this and hide that and this like that, right? You can see, can't you? Let me just move this over a minute. Oh, now you can see that. That's not going to work. Anyway, if I just do that and that, right? What are we trading? Doesn't matter, does it? It moves up and down. If it moves up and down with momentum, the opening range breakout strategy will work. You just need to know when the momentum's coming. Unfortunately, you don't know that in forex. As a newbie, would I be better off position trading using the ORB or using the OLB strategy? They're totally different strategies. Opening range breakout only works on stock indices at the open. So it's going to, I mean, it will work at the open in the stock market. Position trading works all the time on all FX pairs when the market is normally working normally. So it's as a newbie, what I would say is come back in 6 months, because this is not a normal market. If you try and learn how to trade during this type of market, it's going to be a very rough ride. Start with a boot camp. So the best thing to do, well, I say as a newbie, I mean, this is not really a newcomer's course, if you like, but the boot camp's all free on the website. Go and watch it. But it explains how the market works, and it explains the basics of mean reversion and market structure. But I give some strategies in there, but there's no one strategy that's going to work all the time. Yeah, this is why people fail all the time with things like prop, because they don't understand that strategies, an edge in a strategy is only an edge when the market regime and the market conditions are right for the edge. So when the market regime changes, you suddenly lose the edge, which means you have to change, you have to adapt. And this is why successful traders don't trade one strategy. They don't trade a strategy strictly either. They just trade what they see. So I see a 3-bar reversal here, which is a bullish price action pattern. But I see a market collapsing, which means I don't want to take it. That isn't something you can teach. You can't say if the market has dropped by X% today, you shouldn't take a 3-bar reversal long, because that is a mean reversion reversal pattern, which is exactly when you should take it. But you don't take it today because of what's going on in the market, which is why it's failing. There's too much downside pressure. This sort of stuff isn't stuff that you can teach. So you have to learn everything, do everything, spend years being beaten up to figure out what doesn't work. You will be left with what works for you, and I can't tell you what works for you. I can't tell you what time frame you need to trade. I can't tell you whether you should use candlesticks or line charts. I couldn't tell you whether you should trade futures, stocks, or FX, because you need to try everything, and something will click or it won't. And this is why 95% of people just can't get on with trading, because there isn't a way to do this consistently in the same way, because the market isn't consistent. The market is random. There are never 2 days in the market in history that are the same. You cannot find the same price pattern on any chart, on any time frame, identical 2 days in a row, ever. Go back through your charting. Don't do it, because you'll die before you get there. But go on a 15-minute time frame, open up, take a screenshot. Yep. And then go and try and find me this again. Doesn't exist. So how can you trade that? You can't. Because if you're looking for a pattern in price action, you're looking for something that's happened once. Something will happen again at a different price level with different price action before and after it, which makes it do something different this time. It's random. The market moves because of the weight of orders long and short by banks and institutions, which changes on a minute-by-minute basis. So you get a beautiful push down, followed by a pause and a push up. At that minute in time, there is an exhaustion in bank shorts overpowered by longs, What happens next is dependent on the next 1 minute price action, which is unknown to all banks and institutions worldwide because it hasn't happened yet. It's the future. So you can see a price action pattern happen over and over and over again. I can show you 3-bar reversals all over charts, everywhere. Market reversal alerts. I can show you tons of them that work. Look at that, beautiful. There's the retest, short, lovely. Market reversal alert, amazing indicator. I bought it. Works beautifully. When it breaks above there, it's a signal to go long. If that works or not has nothing to do with that indicator. It's whether or not when that candle breaks long and that square turns orange, the next 5-minute candlestick and the ones after that are dependent on whether the banks or institutions have a bias long or short on the balance of orders that go through the Euro Swiss in the next 15 minutes. I can't control that. You can't control that. You have no control. You have to get in. It doesn't matter how many times you see this happen. Whether or not you make money has nothing to do with that. It's down to the banks, which is what I was saying earlier. You get paid when the banks pay you. You can take the same signal 10 times in a row and be right 10 times. You can take the same 10 signals tomorrow and be wrong 10 times, and then be wrong 10 times the day after that. That signal has nothing to do with making money. So you will find that you will spend your life going around in circles on forums, courses, videos on YouTube, trying to find a strategy that works. There isn't one. I can give you 100. I can give you 1,000 different strategies based on the opening range breakout that I have tested that work. Not that one, this one. There we go, break short. Couldn't get it today. I can show you 4,000 variations of the strategy that work, or 2,000 or 3,000 variations of this strategy that work. But which of the variations I need to run today, I have no idea. You can change it every day and you will be right or wrong, but it's nothing to do with you. It's the market. The market pays you when the market pays you. You just need an edge and a way of extracting money out of the market that works consistently. Position trading's edge is the fact that it doesn't need accuracy. ORB's edge is the fact that we know when the time of the momentum is coming every single day. And this has an edge in the fact that it recovers losses automatically. Other strategies have other edges, but those edges are long term. And what you do as a trader when you're new is you learn something, you try it, it works, and then it fails. So you scrap it, you try something new, it works and it fails. That's what strategies do. You're not going to find one that doesn't do that. So just use the first one you find and keep trading it. But backtest it over 5 years and see whether or not there's a long-term edge in it making money. And then work out how much bank balance you need to put in to extract a salary out of that. So if it generates on average 15 to 20% a year, and you need to make 10 grand a year or something like that, you're going to need to put 100 grand in the bank to be able to trade with it. If you haven't got 100 grand, McDonald's is hiring. That's real. That's what this is about. Yeah, strategies do not generate 100% a week, he says, with 150% sitting there for the last month. But this is not real. This is I have to put a balance in to this account. The risk I'm using on this account is the risk I'm comfortable with. I haven't got that balance. That's not my balance. I've got loads of balance in the bank. I can top this up anytime I like. But realistically, you're going to be looking to make somewhere between 5 to 10% a month on average. And traders that make more than that are high risk, and they will probably get burnt at some point. But that's what you learn. But you will learn it by doing it. You will go around. If you go, you can go off and go to Forex Factory. I've said this many times in the past. If you go to this website and you go to these forums and you click on this trading systems here, you have 3,348 trading systems. Okay. If you learnt one of those every day for the rest of your life, bearing in mind they're continuously added to, you will be dead before you find one that works. I've been there. I spent years there. And the same names are still coming up looking for the Holy Grail. I know the names. They're still there. They're still losing money. Because they're trying to find something that doesn't exist. because nothing will work. You have to adapt. You have to change with the markets. Opportunity to hit the short button now. I'm not hitting it because of this. I don't want to jeopardize this, but I'm pretty confident if I do hit this, I can get that back. But what I do not want to do is get into a spiral of this, which could also happen today because I've never been in a situation where we've had trade tariffs like this before. So the best thing I can do today is walk away. That I've learned over decades. But new traders will be going, got to get that back. And they'll be pushing the market to try and get money. You can't extract money out of the market if the market doesn't want to give it. If you are going to short this and then it's going to go up, you are going to lose. So what are you going to do next? Wait for the next breakout? Or are you going to wait for it to get there and then short it, which is exactly when it's going to break out and come and retest this area? I have no idea what it's going to do. Neither do you. But all you can do is apply risk and reward to the market today and try and extract some cash. And when you've got the cash, you stop. And if you get to a level where you don't want to spend anymore because it's going wrong, you stop. That only comes through practice. And they'll teach you that. Every course will teach you that. But you won't do it. You learn by losing. That's what this job is. Horrible, but it's what it is. Start with the bootcamp, but yeah, bootcamp is, well, what I was going to do is put a link. I didn't do it, did I? So yeah, start with the bootcamp. And that'll teach you how it works. But this is kind of a level beyond baby pips, if you like. And then I would recommend to watch the charts and play with the demo. Yeah. Experience has no price. Yeah. The best way to get experience is to get in the strategy tester. So open the strategy tester, stick any EA you like on and just press the button, not in optimization mode or non-visual mode. This isn't going to work because it needs to do data crunching, but watch the charts go by. I've got a product on that I have built called the Zone Trader EA. And this is a fantastic tool for learning how the market works. And basically what it does is it allows you in the strategy tester to draw support and resistance on the chart with blocks and let the market move between support and resistance zones. Yeah. And if it goes through one of your zones, you then draw another zone where you think price will bounce, and it will teach you how the market moves. And if you spend loads of your time in the strategy tester, just drawing support resistance zones with the Zone Trader EA, it will burn into your memory how market moves, because you'll see weeks and months and years flying past in front of you. That's the best way to learn. That's the wrong EA. But yeah, spend time, just watching this thing. Yeah. This is what one of my mentors said to me to do. Sit here, yeah, stick an EA in, stick anything in there, and just watch it. Watch it trade. Watch the market and watch how it moves up and down. And convince yourself that the only thing it does is go up and down. And when it goes up, it hits an area that it can't get through, and then it bounces off of it. Yeah. And if it doesn't, it will break through it. And when it breaks through it, it will come and bounce back off of the area it broke through. And then it will move on to the next place it's bounced from in the past. And then that's all it does. It just goes up and it goes down. And all you do is you keep getting in and out with the market when it's going up and down. But how far it goes, how quick it goes, is totally out of your control. Because it's not the banks or institutions or your choice where this goes. It goes where the volume drives it. And if there's 10 billion pounds coming in long today and 5 billion pounds coming in short today, the 10 billion is going to overwhelm the 5 and it's going to go up. But you don't know that, and neither does Barclays, because Barclays can only see Barclays part of the picture. HSBC can see its bit, Citibank can see its bit, Morgan Stanley can see its bit, and all of them will put those orders into the market and it will go somewhere. So how can you possibly formulate a strategy around something that moves at random on a minute-by-minute basis? Everyone will tell you they can, but no one can show you a P&L that proves they can do it. So you've got to have a way of extracting money out of movement rather than trying to force movement. And as it's random, you just get in and out. So position trading works because it doesn't matter when you get in and out. You just get in and out and you just keep making money. Wrong one. Yeah. Position trading is great when the market is not in a parabolic squeeze, but it will go into parabolic squeezes and then it will struggle. Nothing you can do about it. If you have a year that goes past with only 2 squeezes in it, you will kill it. If you have a year go past with 10 squeezes in it, you will not make any money. But whose choice is that? The market, not mine. The way it works, unfortunately. I wish it didn't. I wish we could all predict the future and know exactly where it's going to bounce every time, because we'd all make billions, wouldn't we? Wouldn't that be nice? If I'd have known today that what we needed to do was have our stops at 2 ADR instead of 1 ADR, I'd be laughing, wouldn't I? In fact, that one I needed at 3 ADR, 30% of ADR. This one I needed at 25% of ADR. If I'd have known what was happening today, I would have adjusted my stops to the correct levels. But some days this will work, some days it will fail. It's random. But the edge is there because the risk reward is, and the timing is the most important thing. The risk reward works with the timing. Those 3 things together are the combination. But, you know, it's not something that's going to work every day. I will leave you there. It's Friday afternoon. It's 3:20. I was meant to come on for about half an hour. We're like 2 hours in. So I'll be back on Monday as usual. Normal stuff. We'll go through the markets, have a look at everything. Obviously, Monday we've got gaps potentially. Whoa. Never seen that in my life. Never seen that in single digits. Never. Look at that. They only put a 7 on the chart. Never been there. That says everything, doesn't it? Confidence in world economics is gone. I've never seen that before. That's amazing. Oh, wow. China played it wrong. They panicked. The one thing they cannot afford to do. Such a bully. He's such a bully. Look at that. Great job numbers. Far better than expected. It's just lies and rubbish. You're looking at this. You're not looking at that. Great job numbers. Far better than expected. More people are unemployed than they were last month, Donald. That isn't good. More people, 4.2% instead of 4.1% of the population don't have a job. That is more people don't have a job, Donald. Far better than expected. No, you were expecting 4.1, you got 4.2. You're focusing on the non-farm employment change. So you've got another number you can use, which is up. That's got nothing to do with employment. It's just spinning rubbish out of his mouth constantly. This is the thing that drives me nuts. Why is no one else seeing this? It's crazy. Unbelievable. Unbelievable. His best mate, Elon Musk, is almost bankrupt. And he's sitting there going, great job on the numbers. After yesterday's YouTube is flooded with gurus made thousands trading. Yep, I'm sure it is. I'm sure it is. I've stopped watching most of it. I've just stopped it now. I've stopped watching. I come in here and do this every day. I post every day. Every day I try to post every day. I don't get the time, but just it will be flooded with people trying to sell something, won't they? Someone will be trying to sell something. Trump is playing poker with the world, I know. And he's got the gall to turn around and say to Zelensky, you're playing with World War III. You're gambling with World War III. Oh, Sorry, did I just blow up the entire economics of the planet? Zelensky should be on the phone going, "You're playing with the entire planet." It's crazy, isn't it? Couldn't make it up. Wouldn't want to make it up. Look at that. The world is screwed. From an economic perspective, anyway, the world is screwed. So let's just see what the result of that test was. Bit of a dodgy end. Never mind. Right. I'll be back on Monday. Anything you need, let me know. I'll be in Discord. I'm working on the ORBEA logic for loss recovery because there seems to be something that some people, well, one person's had a problem with, which I've just discovered might be a problem. But I'll work on that over the weekend if I get a chance and try and get something pushed out. But I need to test it. So I'll probably run it out live on my account next week because I'll be the guinea pig. But I will change the way that works a little bit. And give people a little bit more control over it, I think. So I'll sort that out over the weekend. All right, have a good one. Anything you need, let me know. Other than that, I'll be back on Monday. And fingers crossed, we'll all still be here. Have a good one.